Wow, seeing this barrage of bullish news for the yellow metal actually gives me the creeps. I can shake the feeling that a dump is imminent. Look at the headlines over the last couple of days. Global central banks still binge buy in April, gold overtaking US Treasury as the premier reserve asset, yada yada. And logically, with this massive wave of wealth pouring, gold prices should be skyrocketing in the short term. Yet, it just keeps leading, spiraling endlessly downward. Despite a mild bounce in the Asian session today, the overarching trend remains a volatile descent. What's the real story behind this? My take is that the market is completely numb to conventional good news. These seemingly hyped, bullish headlines utterly fail to address gold's immediate pain points, meaning a lack of upside surprises. Not to mention the metal is still digesting that massive, overextended rally from earlier this year. Face it, the so-called central bank gold rush and reserve paradigm shifts are macro narratives spewed for the grand cycle. They dictate gold's absolute floor, not its short-term ignition switch. It's the classic case of a chronic catalyst being entirely present. The market hears it every single day until their ears bleed. Why on earth should institutional smart money ignite a massive rally over something everyone already expects? The brutal truth is that gold's biggest pain point is hiding in plain sight within last night's news cycle. First, the US dollar index surged aggressively overnight, smashing through to highs unseen since April. And the trigger, Trump tossing out fresh terror threats, and the primal instinct of global capital is to aggressively hog the greenback. Gold and the dollar play a little game of seesaw. When the dollar flexes, the yellow metal inevitably bleeds. And second, last night US ADP employment print for May completely blew past market expectations, proving the American labor engine is still running red hot. If this Friday official May non-farm payrolls follow suit and beat expectations, it will decisively cement the Fed's higher for longer stance, perhaps even reviving rate hike bets. That scenario that lacks any room for a gold rebound. So, what kind of catalyst can actually detonate the next major gold rally? Behind the scenes, there are only three nuclear grade catalysts capable of sending the yellow metal to the moon. Catalyst 1, the tangible execution of the Federal Reserve's rate cut cycle. Right now, the market is obsessed with guessing the timeline and trading a mere concept of cuts. This parallel game for expectation is entirely played out. What gold demand is for the other shoe to finally drop, or for inflation, that employment data to fall off a cliff, forcing the Fed to capitulate. And the second the rate cut floodgates open, the opportunity cost of holding gold vaporizes, and the metal would take flight instantly. Catalyst 2, a severe deep correction in the US AI sector, triggering a massive liquidity spillover. Right now, the AI frenzy is acting as a black hole, sucking up the vast majority of market liquidity. Only when tech faces a deeper than expected washout will the vertical stricken smart money cash out and hunt for the ultimate safe haven, with gold naturally being their prime target. And Catalyst 3, a violent reversal in US Treasury yields. When Americans adapt, snowball grows so monstrous that high rates become mathematically impossible to sustain, forcing a hard landing in bond yields. Gold supreme status as hard currency will violently reassert itself, and therefore this is the brutal reality of the market right now. Conventional good news is essentially dead air. We need a game-breaking super catalyst to salvage the yellow metal. And once it hits, I fully expect to see an explosive unilateral mega trend. Okay, and I finally bring it back to the charts. My core strategy remains selling into strength. Although gold is still trapped in the 4,400 and 4,580 range, I believe the upcoming NFP will likely be the pivot point for a downward breakdown. The previous psychological defense line at 4,500 has been shattered and now acts as heavy resistance. Therefore, any dead cat bounce to that level is a green light for me to aggressively execute short positions. There is decent structural support down there, 4,420. So for those brethren looking to gamble on a short-term long, that is your entry zone. As always, this is just my personal analysis, not financial advice. And shout out to EBC Financial Group for sponsoring the content.